In the name of God, most merciful, most compassionate, at the outset, I'd like to thank Mr. Ahmed Abu Ali, and I'd like to thank Dr. Abla. She's a very spontaneous person who turned this center into an ever shining and center that is characterized by the diversity. I'd like to thank her and her team, because they should be credited for issuing such rich paper. And when I met her, first told me we are trying to solve this dilemma, and I met Mr. Ahmed Dawood first. So we restructured the paper, and I think it came up as really a good research paper for both academics and laymen. As for this topic, there is a project that we call erosion of tax base, and this is under OECD and G20. The first actions is taxation challenges on digital economy, and this represents a major challenge not only for developing countries but also for developed countries. So that's why I wanted to take you through the paper. So of course this paper tackles income tax and VAT. But where is the problem? The problem really lies in digital economy. As like what Mr. Ahmed said, the tax rules are no longer viable. In 2005, Egypt realized that we cannot work on a regional basis, so we should tackle residence-based taxation. It gives the state the right to impose taxes, but the digital economy is not the problem of users or subscribers. It's a problem for the state where the company or corporations work. Most of these companies are American. So we have 10,000 research papers based on community dialogue. So this is a real challenge, even if company works in the same state, and most of these companies are American. So the OECD and the G20 couldn't issue a decision; they just issued recommendations, because most of these are recommendations to be proposed by the state, and of course USA was not a party to this multilateral treaty. So we have a problem on the residence of the company, whether this is an American company or a company working from somewhere. So there is another measurement on what we call economic measurement, performance measurement. You are like an American company, so you serve the company or you are tax resident, and the company also spends much money on R&D, and the company in return gets some tax exemptions or tax credits, and then they will shift their activities into tax havens. So we will consider the revenues or the profit made in the original country, since they spend much money on intangible assets. So this is not the real focus of today, but I just want to shed the light on the fact that this is not our problem. This is on the state where the company resides. The other part, which has to do with the original company where these corporations invests in. Egypt is such a country. According to the international conventions and treaties, countries with strong tax systems impose a tax on international income and not regional or local income. So, for example, nationality or residence is not the criteria, so they will tax the profits made whether in America or elsewhere. So if you pay taxes in Egypt in accordance to the Egyptian law, you will get in return some tax credits, and this is like a win-win situation. Sorry, this is like a double taxation, but what we are trying to do is to avoid double taxation, but they should pay taxation. And here the difficulty lies. The company starts to file an application to start their company in a tax haven, and then at the very same time, according to the same traditional rules, many countries all over the world, e-commerce is not taxable. And that's why OECD is working to change that each country should have the right to tax the company working. Usually the server is abroad, that's why they don't pay taxes, and in Action 5 some companies do not pay tax even if they are tax residents. So here is the crux of the problem. So if you have like an American company, and if the only criteria is residence, then this helps people evade taxes. That's why they came up with another set of criterion. We should tax the corporation where the value is created. This is the new criteria, or this is the new objective. So we will track these companies and see where they provide services. What about VAT tax? VAT nowadays is usually not a taxation. It's linked to the idea of international competition. If VAT is taxed on a certain product but not the other, then this affects the competition. And in some European countries, let's say a company in Austria will sell their products outside Austria online in order to evade VAT. So this is a problem. So VAT is applied regionally, and there are no agreements to avoid tax avoidance or VAT avoidance. So this is a problem. The real problem is not evident with goods, because taxing rights for importing a country through custom outlets. So mostly all over the world there's this is okay. But the EU now faces a real problem because they have some exemptions for certain goods whose value is less than a certain value. So maybe the problem is discussed in the papers. So the problem is really evident when it comes to services, and we need to distinguish between business to business services, because the business receiving and importing service should be subject to the tax systems. That's why they apply the reverse obligation as stipulated in the Egyptian law. But the problem really lies from when the business or when the service is provided from B2C. So the business is providing a service to a normal person, to a client or a customer, and this is the essence of my paper. As for the income tax in legislations or treaties and conventions, foreign companies are taxable since they get their income from Egypt, so the country has a right to tax. But the activity should be conducted in a physical establishment according to the Article 174. So we need a permanent physical establishment. So we call it legal fiction or a legal loophole. So this is an entity without a legal personality. So we have an establishment, whether a partnership or a joint stock company. So if we want to impose taxes, we need to have a permanent establishment. This is what the law stipulates, the law number 91, and what most of the agreements concluded all over the world stipulates. The company needs to have a permanent establishment to be subject to taxation, and a branch will do. So if you start a branch in a certain company as a physical being, whether a workshop, a mine, a branch, or an office, or we can take another criteria, which is the duration. So maybe we can consider it a permanent establishment for construction because this company has been working for a certain duration. So all this is physical and tangible, but a new concept emerged, which is virtual establishment. So unlike permanent establishment. So what happened? So tax avoidance agreements were exploited because some people employed artificial avoidance to what we call physical establishments. So they took advantages of the loopholes. So in many of the international agreements, the agents or the forwarder of a foreign company, this forwarder should have the authority to conclude agreements or contracts under the name of the project. Otherwise, this foreign company will not be considered as having a physical permanent, and this company will not be taxed. So the concluding of contracts entails signing the contracts. So maybe we can ask a different person, or we can ask people to sign the contracts abroad to avoid this. So when it comes to digital economy, this forwarder should have the authority to conclude contracts or play the major role in negotiating contracts. So we modified Article 12 in July 2017. So this foreign company, and these companies might be having digital economic activities. Since we have a person negotiating under the name of this company, then this will be considered as a physical existence or a physical establishment, even if this person does not have the authority to sign the contract.
So the second part, this will come be clear through Uber example. So this is the independent forwarder or the independent representative. This is not considered as a permanent establishment. So if any foreign company have sold through this representative, anything, so there is no existence for this representative. So this independent representative is accountable for what? For the commission that he gets minus the cost, and this is the tax base that he should be subject to. But for those companies, they are not subject to tax base, and they found that this also impacts, and that's also the digital companies started to use this method. That's why they started to amend the article in the international conventions, saying that if this person dedicated his activity or most of his activity, so most here of his activity means more than 50% for the interest of a company or a relevant company. Sometimes here the selling can be through a relevant company. So this considered the independent representative as a relevant company. So he is considered as a permanent establishment. And some companies said that they are using some workers in relative or affiliated companies to market some products. Of course, they have some restrictions about the manpower, but there is other restrictions, and it's considered in this case as a permanent establishment, and there it's the right of the state to impose taxation, especially if either they are dedicating the activities for the foreign company or an affiliated company or a relevant company. The core point here that there's in the Egyptian example there is something called the negative list. What's the negative list? The example says here that there are some establishments they have physical existence, but they are not permanent establishments. That's why they have pointed in item number 1 if they are talking for showing, delivering, or stocking. So in article 1 and 2 they said that show representing the goods. This is in the example of the OECD. Maybe there is a special ruling in the UN, but in the Egyptian law, that's what the Egyptian law is dealing with. If it's a foreign company has a showroom here or has a warehouse or a place to deliver the goods according to the Egyptian law and according to the international laws, so this is not a permanent establishment. Of course, there are other things about the operation, purchasing, gathering information. There is an agreement that this is not to be considered as a permanent establishment, but the category or the standard was that this activities has the preparatory characteristic or a secondary characteristic. But after they said what after that in the new amendment that what was preparatory and secondary in the past cannot be considered nowadays as preparatory and secondary. That's why the article had been modified or amended. So if the company delivered the goods or used the warehouse or gathered information inside the state, in this case this is a permanent establishment. So what's clear here that they are trying to expand the concept of the permanent establishment so it can cover a lot of activities, a lot of the digital activities. And Egypt had not ratified yet till today, and so it's not here the problem that is Egypt had signed but not ratified. Yes, it's a multilateral agreement that Egypt had signed. There is something called minimum standard of complying standards. So if you are going to sign, there are 4 procedures that you have to agree upon, and one of these procedures, are not one of these 4. So the other regulations that I explained are optional. If the state will choose them, it will be applied. If not, as if you did nothing. So Egypt will not benefit from signing unless the other countries, Netherlands have signed, because Netherlands is under the microscope, under scrutinization, because it's a tax haven, although they didn't say this explicitly. But Netherlands is considered as one of the financial centers to be considered as tax haven, and try to this is the only country who approved or signed on this agreement. So what's the problem now? They are saying, oh, let's be objective, because they are thinking about certainty. The companies who are working in the digital economy, they are not taking, or they are not interested in paying taxation, or they do not think about this. If it is a US company and Egypt has the right to impose taxes, so for sure it will be deducted from the taxes paid in USA or whatever the country they are working at. So there is no fear that they will not pay. The problem is what? The problem is that they are trying nowadays to find a solution for the problem. How can we calculate the profit percentage? Let's say that Uber is subject to taxation. So how can we calculate the profits? And Uber is Uber has some limits. We can talk about selling books or other goods. Of course it will be different. That's why it's a problem that they are studying now in the OECD. And but most probably that the countries, especially UK now, instead of taxing the net profit, so the taxation authority is not going to say that this is revenue, this is the cost, and this is tax base. So they started to do excise tax or holding tax, or the VAT. They found that this is the best solution to prove or to provide certainty. If the companies knows that it's going to pay 1%, 2%, or 3% of their capital or their revenue, this is easy to get the number of sales or the number of the percentage of activities. So what do we need to do? We need first to amend the tax legislation. Signing the agreement is meaningless. to determine the tax base and the incentive. So this is an internal legislation. So if it doesn't give you the right to impose taxation. So this agreement here doesn't give you this right. So it's not enough to sign it. And in this case, you cannot apply the agreement. It needs synchronizing amendments and modifications in the internal laws or law number 91. This is briefly. But what about the VAT? The problem of VAT that if we are talking about income, if we're saying that two states are imposing taxes, and if there is a kind of duality, according to the agreements, the resident country is going to pay the taxation. But the VAT here is focusing on regionality, meaning that the consumption of the service or the good to be taxed in Egypt, it has to be subject to subject that the consumption of the end user here in Egypt. So if the end user is not here in Egypt, so Egypt doesn't have the right to impose tax. So this is the problem. This is not the problem. The problem that we are dealing with goods. Yes, I have some outlets that I can control, even if I sell the goods or re-export it. But the general rule says what? That the exporting country does not have the right to impose taxes. That's why they are imposing taxes on the exports. Why? Because according to the GATT agreements, any good or service exported should be free. That's why the price is zero, so that they can restore the tax on inputs. So the taxing right is for whom? Imposing right is for whom? Is for the state, the importing state. So this is an absolute right according to the taxation rules. So here it's an important country to impose tax, but take into consideration something: you cannot impose tax on an imported good and make it free of tax when it is used or with a reduced price. So it has to be the same price applied. Why? Because if I give the taxation right to the state, of course there are other countries, they have 10% as tax, or other countries 10 to 20%. Of course I'm going to search for the country that doesn't have taxes. So that's why the tax right now is the right of the importing country. So the problem is not in the goods, the problem is in the services. The services, we do not get them through outlets. So the objective view here, they are taking into consideration that the VAT here means that you are providing a service in the state. So the VAT is supposedly on the consumer of the service. But what is the role of the merchant here or the trader here? That they are facilitating the trade process. So that's why dealing with VAT is somehow is discretionary. So what's the problem? The problem is with the imported services, because there are no agreements. There are no agreements about the international tax. The OECD have determined the mechanisms to impose tax on VAT, because if you are not using these standards, this will lead to two things: either to have a duality of taxation or not subject to taxes, and both will harm the economy. So we have always, whenever we talk about VAT, we are talking about harming the economy, because sometimes because it creates some confusion. So the methodology is based on what? The methodology is based on that the consumer of the good is, if it's a natural person, so according to his residence or according to his domicile, which is called, if there is a trade activity, it's according to the address of this trade activity. So that's why they are saying always the place of the activity is the place that should impose a tax. But after that, they said that take into consideration that this sometimes it's a misleading rule. Why? For instance, I'm living in Egypt, and my company sent me abroad for a mission. That's why I have to stay in a hotel. The hotel here, the VAT here, is on the hotel services. So if I say that the VAT in my home country, this of course is not suitable. That's why they said you have the first type of services that should deal with is the following. If the service is consumed in the presence of the service provider, which is the hotel, and the service consumer, which is me, and it is consumed at the same time, in this case you have to take the financial performance into consideration. So if I have an hotel and or there's a show exhibition, or I send a group of people to be trained abroad, so once the service is provided in the presence of the service provider and the service consumer, and it's consumed at the same time, so you have to take here the indicator of financial performance. Also, you have to take into consideration another point, that sometimes you are sitting in the entrance of one of the hotel, and you need access to the internet. So okay, yes, I'm living in Egypt, I'm residing in Egypt, but so in this case the place of consumption, here the indicator is the place of consumption. So they have covered many things. Also they said that this service might be related to a property or a real estate. Let's say that I'm establishing a project and I need a design. I send to an international company outside abroad to bring me the design. So all these services relevant to real estate or services relevant to construction site, it is according to the country of the project. The same for the movable properties. I have an equipment that I needs maintenance or fixing. So even when here I impose VAT on the service. So the general rule, if the service is for the equipment, so this is the right of the state to impose tax where the consumption takes place. All these rules are applied, but we said that the tax is imposed on the tax is imposed on the consumer when he is provided with a service. So in Egypt here the tax will be we get the tax from the service provider or the consumer. This created a confusion. So after they finished all these rules, they said that in all countries of the world, if we are selling services, I'm here focusing on services because this is the one creating price from B to B. No, there is no problem because there is kind of reverse cost or reverse operation. So who is responsible here is the supplier. So where is the supplier? The supplier here is situated abroad, not in Egypt. So that's why they started to transfer this commitment from the supplier to another party. So if a company abroad is providing a service or it's a government, so here as a beneficiary from this service, I should calculate the tax and collect it and deduct it if I am subject to the factoring or the deduction rules. But the problem starts when it's from client to client or from business to client. The most common problem, and they should look to take it into consideration if the selling is from business to client. The law stipulates what I'm not sure whether you know that any one of you, if he bought antivirus according to the Egyptian law as a natural person and according to the legislation, you have to calculate the tax and pay it. I'm not sure whether you know this or not, but I think most of us do not know that. So this is a common problem all over the world. How do they deal with it? The system is to collect from the buyer, and they said that this system didn't prove any successfulness in any country, either in developing or developed countries. So any consumer of any service, they don't have any incentive to pay the tax or to disclose the revenue. So that's why they started to try to look for another model, which is the seller model, the collecting from seller model. And of course it's based that on this person is providing a service, so don't bother him. Don't to provide you a service, don't ask him to have here a permanent establishment, because there will be an income tax. So to have a permanent establishment, this is not an acceptable idea. So what would we do? Yes, you can do e-filing, e-payment, even if we are invoicing him. So they are saying that we are invoicing him according to the VAT rule, VAT law. So one of the data required, you are not going to deduct the tax of inputs. That's why there should be an example or a model of an invoice where it has contained 5 data, so we are not bother the service provider there. In addition to that, you should encourage and give them incentives to be a fast track service. If you have to give them an advantage or a privilege. So when we are going to take into consideration the Egyptian law, we find that it's a condition that the representative has to be residing here in Egypt. And in the Egyptian law, it stipulates what I am now Mostafa AbdelKader, or a company or a registered person, and he had acquired a service from abroad. So I am supposed as the consumer or the beneficiary to pay the tax here. So the law stipulates what if I'm not residing here and this service provider does not have a permanent establishment. So they gave me the right as a consumer to ask the non-residing to pay the tax. It's not logic. So according to the law, I'm the one who should pay the tax because I'm the beneficiary of this service. But of course, there is non-applicable statements, non-applicable articles. That's why.
And this takes us to the alternative system, the third system, which is a collection of intermediaries. Maybe people is not capable, so they will search for a mediator, maybe a post officer, for example. We will not be sending, we can send the service through the post officer or to collect the fees or any other financial institution, but he will face another problem. The privacy of data here is critical. So for example, the post available or the data available in the post cannot be identified when it comes to tax jurisdiction, for example. So if you open this opportunity, then we should coordinate, because data privacy is a concern here. Another thing, why should we ask people to write a tax return or a tax declaration form on an on a monthly basis? We should have a simplified system to work as a tax incentive, because the burden of taxation shouldn't be borne by the provider but by the consumer. So we can go for withholding tax or excise tax just as other countries do. Maybe we should have a special reduced price compared to the normal price. All this serves as tax incentives or application of new rules. I'd like to conclude here. When we refer to Uber, we should take many things into consideration. We have an international company here, and this company is not resident here, and the application is not owned by an Egyptian company, because of course even if you get the usage right, or even if you have this application subject to royalties, this will not apply, because the Egyptian company is Egyptian company working and residing in accordance to the Egyptian rules. So this company is like a forwarder or an agent. So this Egyptian company is only an agent, but the application is owned by the international company upon which we have no mandate. So the Egyptian company gets only commission minus the expenses borne. So the net profit will be taxed. Why do I conclude with Uber example? Because Uber is an easy example when it comes to digital economic activities, because it's a transportation service provided by a driver to a rider. When it comes to the driver, there is a controversy. What is the relationship between the driver and the company? Is it commercial or is it like employability? Here we are referring to a transportation service. So according to the tax rules, and according to the standard forms, we should refer to the de facto concepts and not to the concepts referred to in the contracts. But the nature of the activity should be the main judgment. I think we should impose tax on drivers, and this is normal, because taxation shouldn't be subject to the nature of the relationships. So even if I don't have permissions or permits from the state, why shouldn't I tax him? This is not acceptable. So we can tax the driver. I don't need any special laws to have this driver subject to taxation. This is a commercial activity that should be taxed. And we have a certain item or for Uber drivers to pay 1.5 tax rate compared to the normal taxi, and that's why we need to restructure tax on transportation system. Taxing taxis or microbuses during the work for less than 5 years without a tax credit would not be more than 100 Egyptian pounds. So if we have a brand new microbus, and if this microbus works in accordance with the new rules, then he will get tax credit. So the tax he will pay will not be more than 100 Egyptian pounds or 150 Egyptian pounds. So all we need is to restructure the Egyptian tax system to simplify taxation and to have a fair share building. Otherwise, the system will go out of balance. And also when it comes to data privacy here, some items might conflict with the constitution. So the tax should be incommensurate with the income made. Thank you so much.